Welcome viewers to the third episode of the Property Investment Network, a show where we learn about investing in property from an African perspective in 10 minutes or less. This is your host today, Taka. I'm your host today. We will be discussing a very interesting topic: 12 ways to make money from property. 12 ways to make money in property. Now let's just make it clear just from the beginning that these are 12 ways, and we may not finish in today's episode, so we may have to continue in the next episode. You have heard it a number of times that you don't need money to be a property investor. Well, today, after looking at all these ways that we're going to look at, you're going to see that it varies. There are certain investment where you need money or other people's money, and there are other investments where you don't need much money. There are also other type of investment where you need a lot of knowledge, or you can say other people's knowledge, because if you don't have knowledge, you need someone with knowledge. And in some of the investments, you don't need much knowledge. And then you also have certain types of investment that needs a lot of time involving. And if you don't have time, you may have to use other people's time. In other words, other people can do the work for you. So these various type of investment, they've got various risks and various return. But like any investment, the higher the risk, the higher the return. So those two go hand in hand. I want to mention at this point that if you are enjoying these episodes, please click like. You can also leave a comment, but I want you to subscribe to this channel so that when a new episode is loaded, you receive a notification. You won't miss, because we are going to go through all these 12 ways how you can invest in property. And I believe there's one way, maybe two, that are suitable for you. Let's go to the first one. It's called buy to let. This is the most popular way of investing in property. And I'm sure all of you know about it. You buy a property in order to rent it out for an income. This is a long-term investment. In other words, you cannot buy a property and rent it out and you plan to do this project for a year or two. It has to be a long-term investment. Why? Because the aim is that the rentals that you receive from the property, you're going to use it to pay off the loan that you got to buy the property. So this is a long-term investment from 15 years, 20 years, and perhaps even 30 years investment. The important thing about this type of investment, you have to do your research. You've got, someone was saying, you've got to see 100 properties if you want to buy one property. So you need to do a lot of research, the type of property, the condition of the property, does it fit what your strategy? So you need to do a lot of research, and also you need to do the financials right. Okay. The next type of property investment is the rent to rent. Rent to rent. This is also called subletting. In other words, you rent a property at a lower rate and you rent it out to other people at a higher rate. the difference, that will be your own profit from the investment. You don't have to buy the property, you just have to rent it. The aim of this type of investment is to have a constant cash flow. From what you can see, this does not need a lot of money. Perhaps the deposit for the rent, but it also needs high day-to-day maintenance, because these people are renting, you are also accountable. In other words, if a tenant breaks something, you will be responsible for it. So it also involving in terms of running it. The other thing, if a tenant doesn't pay the rent, you have to pay your rent in full. In other words, you are responsible for that as well. On this type of investment, you also need to research a lot to make sure that the property you are getting, you're going to get enough rent from it once you sublet it in order to pay off your rent. Also, on this type of investment, you need to see if your lease agreement you have, does it allow subletting to other people? Because some lease agreement will say you cannot sublet the property. Now, there are various ways of rent-to-rent type of investment. They vary from friends who can share a house. You've got a house that you are renting, but you don't fill it up. You find a friend who can sublet a certain section and you share some of the common areas, and then you pay that rent. Or it can even be like student accommodation. You rent out a big house, then you subdivide the rooms and you give it to students. There are so many ways of doing it. You can even go to commercial buildings. You rent the whole building and you sublet to other business people to rent from you. The third type of property investment is, I think people like this one, it's renovating. It's also called flipping. Renovation or flipping. In this type of investment, you buy a property, you fix it or rather increase its value, and then you sell it in a short to medium term. You don't want to keep this property. You buy it, increase the value, and you want to get rid of it, to sell it at a higher price. Now, flipping range from renovating an existing building, it's also called flipping. It can be rezoning a land or a building with certain zoning, and then you rezone it. Suddenly, perhaps it was residential, now it's commercial. Because it has been rezoned, the price or the value of the property changes. Perhaps it was an agricultural, and then you rezone it to residential. Now it's got potential to get more income out of it, so you can sell it immediately. Also, under renovation and flipping, there's also subdivision. Some people, they buy a big piece of land, you divide it, and then you sell those small pieces of land, and thereby your income is higher. So these are the various ways that you can renovate and flipping a type of investment. But the main point is you don't want to stay with this property for a long time. For example, there's what we call distressed properties. These are properties that people are having trouble, they want to sell them. You buy a distressed property below market value, maybe 50% value. You quickly renovate it, and then you sell it again still at a lower value than the market value, because you want to get rid of the property and go to the next project. But in the process, you make a good profit. So now, just to mention something, when you are looking for distressed property, there are many ways of looking for distressed property. We sometimes call them motivated sellers, people who want to sell their property as quickly as possible and may not be interested in getting a big return from their property. For example, a deceased estate. Someone has died, the owner has died, now they want to do the estate. They want to discard the property and move on. It can be a divorce case where the couple is divorcing. They want to wrap up and move on. So you find that they are prepared to negotiate a lower price. And it can be people who are having financial trouble, the job loss or whatever type of financial trouble they are having, and they've got debts which are high. So now they want to get rid of the property and use that money to pay off the debts. So these are some of the ways of getting distressed property. And then you can quickly fix it up and then you sell it. The key thing is you need to do your research, do your homework. In terms of the financials, you must know the price you are buying for the property, the cost of fixing it up, and then you know the price that you are going to sell it for. So all those must balance. Many investors have lost their money through renovation and flipping. Why? Because they buy this property, they think it's going to cost so much to renovate it, then they find that it's double the cost of renovation, and by that time, if they want to sell it for a profit, it cannot make a profit in the normal market, because the market will determine the price. You can set your own price, but at the end of the day, it's the market that will determine the price. So many people have burned themselves, or rather lost a lot of money in this way. Now, because our time is running up, I will just give you one more type of a way of investing in property. That is number 4, that is property development. Property development is where you buy a land, you develop it, and you build something on it or develop it. You can either sell the end product as a whole, or you can get in small whatever pieces. I'm going to give an example. It can be a block of flats. In other words, you buy a piece of land, you build a block of flats or townhouses. You can sell the block of flats as a whole, or you can sell the various units. This can even be a shopping mall. You buy a piece of land, you build a shopping mall. Either you can sell the whole shopping mall to someone else, or you can sell the various shops. Now, the good thing about developing is that you can start selling once the plans have been approved. In other words, you've got a piece of land, you are preparing the plans. Once they are approved by the municipality, you can as well start to market. And sometimes people can even start buying the property, and then the money that you get from marketing, you can use it back to finish the development. This type of investment is more of a medium-term investment, because you want to develop and sell. It takes some time to develop a property. This also requires a substantial amount of income from the developer, so it needs a bit of some money, and also you need to do good market research so that you give a product that the market is looking for. Now, I'm a property developer, and this is my field that I am working around. I enjoy being a property developer, where we create things and give it to the people, give people a product which they want. It's a very difficult type of investment, because you need certain skills that you need from beginning until the end of the development. We will discuss this topic in detail later in the future, but for today we are going to end here. Just to recap, we've mentioned that there are 12 ways of investing in property. Today we discussed 4 ways. The first one is the rent to buy, the second one is the rent to rent, the third one is renovation or flipping, and the fourth one is property development. Thank you so much for watching this show. Like I said before, if you are enjoying this show, please subscribe to the channel so that you can receive the episode as they come. And also, please click like. It won't cost anything or much of your time, and also share this episode with all your friends so that they learn about investing in property. If you want a transcript of this show, you're welcome to send me an email. There's an email below. So send me an email, then I can send you the transcript of this show. Thank you so much for watching this show. Enjoy the rest of the day. Thank you.